OpenAI is about to launch GPT 5.6. ChatGPT's market share just fell below 50% for the first time in history. And the timing could not be more calculated. Welcome back to AI Assets. Today we are breaking down the biggest strategic move in the AI market right now. What GPT 5.6 actually means for investors, what the market is completely mispricing, and the exact window of opportunity this creates before the rest of Wall Street catches up. Let us get into it. Here is the situation as it stands right now. According to Sensor Tower's 2026 State of AI report, ChatGPT's global market share has dropped to 46.4%. That is the first time in history it has fallen below 50%. Gemini holds 27.7%. Claude holds 10.3%. For the past 3 years, OpenAI has been the undisputed leader of the consumer AI market. That position is now under genuine pressure for the first time. And OpenAI knows it. GPT 5.6 is coming. Multiple developers report that ChatGPT Pro is already faster and more capable in the past 48 hours. OpenAI's chief researcher confirmed this week that GPT 5.6 is a meaningful improvement over GPT 5.4, with a launch window of late June 2026. The timing is not accidental. Anthropic's Fable 5 and Mythos 5 are still suspended by a US government order. Claude, OpenAI's most dangerous competitor on quality, is effectively sidelined at the frontier level. OpenAI is launching its most powerful model yet into a competitive vacuum. That is not a coincidence. That is strategy. Now let us talk investor context, because this story is far bigger than a product update. First, OpenAI's IPO. OpenAI is targeting a valuation above $300 billion. The entire bull case for that valuation rests on one argument, that OpenAI can maintain premium pricing power in the enterprise AI market. GPT-4 to GPT 5.4 delivered on that promise. But DeepSeek is up to 36 times cheaper. Microsoft is already testing DeepSeek inside Copilot Cowork. Claude conversion rates are higher than ChatGPT's among paying users. Every 1/10 of a percentage point that ChatGPT loses in market share is a direct argument against the IPO valuation. GPT 5.6 is OpenAI's answer, a capability jump designed to justify the premium before the IPO window opens. Second, Microsoft. Microsoft owns 49% of OpenAI and has co-invested hundreds of billions in Azure AI infrastructure built around OpenAI models. Every time OpenAI releases a stronger model, Microsoft's Azure becomes more competitive against Google Cloud and Amazon Web Services. GPT 5.6 is not just good for OpenAI, it is directly good for Microsoft's enterprise revenue. Third, the chip stack. Each major GPT release drives a new wave of inference compute demand. Nvidia's H200 and B200 clusters are the primary infrastructure for GPT 5.6 deployment at scale. Stronger models require more compute per query, and that relationship is not linear. A meaningfully better model could drive 20 to 40% higher inference costs per output, which translates directly into GPU demand. Nvidia's earnings in late July will reflect the first full quarter of GPT 5.6 traffic. Here is what the market is missing, and this is the critical insight. Everyone is focused on the product horse race. GPT 5.6 versus Gemini 2.5 versus whatever Claude releases next. That is the wrong frame for investors. The real story is that ChatGPT's market share drop to 46.4% reveals a structural shift that no single model release can fully reverse. When a product that was 80% of a market 2 years ago is now below 50%, that is not a product problem. That is a category maturation problem. AI is no longer a one-model market. It is a multi-model market. And in a multi-model market, the infrastructure layer, the companies that serve every model regardless of who wins, becomes the safest and most durable investment. Azure serves OpenAI. Azure also serves customers running Llama and Phi and Mistral. Google Cloud serves Gemini and competes for enterprise Claude contracts. AWS Bedrock hosts every frontier model simultaneously. The companies that win when the AI model wars intensify are not necessarily the model makers. They are the hyperscalers, the networking infrastructure plays, and the companies building the orchestration layer above the models. GPT-5.6 is a signal that the model wars are accelerating, not converging. And accelerating model wars are the best possible news for AI infrastructure. So what happens next? Here is your roadmap. Watch June 30th. That is OpenAI's target for GPT 5.6 public availability. If the launch slips into July, markets will notice, and it creates negative pressure on OpenAI's IPO narrative heading into earnings season. Watch July 14th. That is the June CPI print. If inflation comes in hot, the Fed rate hike probability for 2026 increases, and high multiple AI stocks, like those linked to OpenAI's IPO valuation, will face compression regardless of product performance. Watch Microsoft and Nvidia earnings in late July. Listen specifically for GPT 5.6 adoption metrics, Azure AI revenue growth, and any commentary on inference compute demand. If GPT 5.6 is driving a step change in query volume, you will hear it in those numbers before you see it in market prices. The smart positioning here is not trying to call whether GPT 5.6 beats Gemini 2.5 on a benchmark. It is recognizing that this AI model war is entering its most capital-intensive phase and owning the infrastructure that every combatant depends on to fight. OpenAI, Google, Anthropic, Meta, they are all customers of the same GPU cluster, the same fiber optic backbone, the same power infrastructure. That is where the durable value is being created. If this analysis gave you an edge, hit subscribe to AI Assets for daily insights on AI stocks, infrastructure, and the investment moves that matter before the rest of the market catches on. Drop your thoughts in the comments below. Do you think GPT 5.6 is enough to stop ChatGPT's market share decline, or is the multi-model era here to stay? We read every single comment. See you in the next one.